Today, we will learn how to trade in tough market conditions and how to make clever price action decisions. We will get help from our beloved trading indicator for finding great trade zones. No more empty talks. If you're ready, let's do this. Let's talk about a couple of recent Bitcoin price moves and the kinds of trades that you should have taken based on mostly on the price action. So, if you look at this price action over the past few days, there were these sharp breaks to the downside, which told me that sellers were strong in this price action. And historically, price has often been pushed lower by this kind of imbalance after a break. So, why am I showing to you this? Because all of our patterns, systems, strategies are based on what the price has done in the past, in the history. So basically, if this same story repeats, we should have dropped hard from this new imbalance after the new break, right? And this is exactly how we build our trading systems. Now let's look a little deeper into this area and talk about it more. Imagine I was only using higher time frames, like this 4-hour chart to trade. For example, if I draw my optimal trade entry, basically the premium and discount range over it, this would be a great OTE location to take a short, right? And if you look a little to the left, you can see that this is a perfect support and resistance, or the SR Philip area. And imagine that I placed my order right in the middle of this nice OTE and built this perfect trade setup using the SR Philip OTE, imbalance, discount area, and ongoing seller trend. Everything looks perfect, right? Like a textbook. But in the end, if you really look at it, my limit order, never gets hit. Price crashed right before my entry limit order level, as you can see it. And now all that effort of analysis, time, everything we did feels wasted now. So now let's open the lower time frames and talk about what we can do about this setup. Because placing a single order is always difficult and often frustrating. Because your biggest enemy in this moment is actually always missing the entry. The best solution here is to build a systematic approach based on the yo-yo entries, which basically means dividing your orders into smaller pieces and placing those entries at specific key levels. For example, I could have placed my first small partial entry at the EQ point of our premium and discount tool after the break and pullback. And then my next order would have been placed right below our most likely OTE position. And my third order could have placed right in the middle of the OTE area, just above the SR Philip location. As you can see, these all are specific key level orders. And my mental stop loss would definitely be at the top point of the previous structure box. If you remember the masterclass, we always talked about how to find these protected highs and lows so we can place your stop losses in the best possible locations. So as you can see, if you place some partial orders like this, instead of guessing one perfect sniper entry location, there is a much higher chance some of your orders will get hit and filled. And that gives you a much better chance of making money instead of wasting all your day, time, and effort in the analysis and waiting. Okay friends, I hope that this video was educational enough for you. See you in the next video and take care of yourself for now. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.